Good afternoon, and thank you for joining Red Cloud this afternoon for our webinar featuring Silverstorm Mining. We have Greg McDonald, the CEO of Silverstorm, to present the story today. Before we begin, I'd like to direct everyone to the forward-looking statement to review the disclosures. We might be making forward-looking statements during the course of this presentation, and you'd want to be aware of the caveats behind that. Red Cloud, I launched coverage on Silverstorm earlier about a week ago. We have a 27-cent target on Silverstorm, representing about 125% potential equity gain through their executing their business plan to restart the La Perla mine and then ultimately advance the San Diego project. La Perla was a past producer. It was owned by First Majestic. Silverstorm was able to acquire it for a reasonably good price. It's got about $150 million worth of infrastructure in place and is ready to go for production by the end of the year. The San Diego project is one of the largest silver equivalent projects in Mexico, with 200 million ounces of silver equivalent resources. That project has opportunity to create some high-grade feed that they can bring to the La Perla mine. So between the two projects that are both in Durango State, Silverstorm has a real good opportunity to create some value in the near term through the restart and ultimate development of San Diego. So I'm going to pass it over to Greg. Thank you for joining us. If you have any questions, you can post them on the side of the presentation, and we will get to them at the end. Greg, over to you.
All right. Well, thank you, Ron, and thank you, Red Cloud team, for setting this up, and thank you, those of you who are online. As you can see on the screen there, you can see the La Perla processing plant. This is a very exciting project. We were able to buy this from First Majestic in 2023, August. And since then, we've been drilling it. We put in 18,600 meters of drilling. And we're ready, as Ron mentioned, to put this into production. So subject to financing, we should be in production in Q4. And let's walk through the presentation. My name is Greg McKenzie. I'm the president and CEO of the company, and I'm very delighted to be with you. So on the far left of the screen, you can see that we had, in the prior ownership by First Majestic, they produced 34 million ounces from 06 to 19. And it was very prolific. They always generated a good cash flow from the mine. There's very good infrastructure in place. You saw the 2,000 ton per day plant, and there's also a partial mining fleet. The operation is permitted for production, and there's very modest restart capital required to get it going. The drill program in the third column was very successful. We were able to increase our indicated resources by over 100%. And it wasn't just converting from inferred to indicated. We also put 58% increase in inferred on the book. So overall, our ounces went from 15.5 million to over 27 million. And that excludes a further 3.8 million that is in pillars. So over the period of time when First Majestic operated this mine, they produced 34 million ounces, and we have 31 million ounces on our books today. We are working with Whittle Consulting to optimize our restart planning, and that's going very well. Whittle has a very good reputation in the industry. They've been able to help various companies increase their NPVs by anywhere from 20 to 30%, all the way up to 150% plus. So we're very excited about that. Everybody says they're undervalued in respect of compared to their peers, and we are no different. In the fourth column, Ron mentioned the San Diego deposit, which is one of the largest undeveloped silver projects in Mexico. 2013 43-101 showed over 210 million ounces of silver equivalent. And since we took over management in 2020, we've grown that number with a couple of drill programs. And so we're very excited about the future of San Diego as well. Current capital structure as of March 28 was about $75 million. Obviously, the market has a bunch of names have traded off over the last few days, but we expect that things will stabilize in the near future. Our largest shareholder is First Majestic. They got their share position by doing an equity swap for the La Paria asset with us. That was the acquisition. And then Eric Sprott, as many of you know him as a key investor in a number of exploration and development companies. I should mention that we closed a $3.9 million financing earlier in the year. We put out the last tranche. We closed the last tranche in February. Some of the key members of the management and board are listed on this page. In Mexico, there's a team of individuals. I'd highlight Clancy, who is a mining engineer and leads the team in Mexico. He's has many years of experience, and he's worked at a number of the big silver producers. And he was previously the general manager of La Paria under First Majestic, and so he's the key guy in Mexico. We are located in Durango, as many other silver miners are. We're in the prolific Sierra Madre gold-silver belt, and this state of Durango has a 500-year history of mining. 23 current mines in production as we speak, and it's very easy to travel to the Durango. Most connections are made from Toronto through Dallas, and then others typically would go through Mexico City, and it's an easy 45-minute drive on a nice highway from Durango, the capital, right to our mine site. As I mentioned, significant in-place infrastructure between the plant and all the development, more than $150 million. If you had to recreate this today and say you were starting from a bankable feasibility study, you'd have a year of permitting, another year of financing, and then 2 years at least of construction just to replicate what we have here today. So we are ready to go. 2,000 ton per day mill, 1,000 ton on the oxide circuit, and 1,000 ton per day on the sulfide circuit with permits in hand. Many people underestimate or may underestimate the value of actually having permits. It's significant in getting even more of a differentiating factor these days. One of the key features of this project is that 67% of the metal is silver. There's a bit of gold in there, but we just lump it all in and call it silver. 67% silver, and 1/3 comes from lead and zinc. And that's atypical. Most silver, lead, zinc mines are 50% silver or to 40 to 50% silver, and the balance are lead and zinc credits. But in our case, it's 2/3 silver. The history of this mine, one of the reasons why we acquired this one, because some of you might remember we had the San Diego deposit before and had really good success drilling it. Market cap went up to $100 million, even a bit higher. And then it came down when silver rolled over in 2021, 22. One of the key issues with La Parrilla is we wanted to ensure that it had a history of profitability. And you can see, throughout the last 7 full years of operation from 12 to 18, they generated cash flow consistently. And so that was one of the differentiating factors with La Parrilla. You can see that on the far right that they would produce about 3.5 million ounces per year. We will do between 2.7 and 3. All these numbers are before inflation. We would expect our all-in costs to be in the neighborhood of high teens, around 20, somewhere in that range. This is the resource statement that we recently published. SRK did this work, and you can see that we have, if you add all categories together, we have 27 million ounces, and then we have an additional 3.8 million ounces that are in pillars. Here you can see the 3 mining areas: Rosarios, San Marcos, and Quebradillas. It's underground ramp access. There is a pilot shaft that First Majestic put in, but that's something that we can consider. They spent 60% of the capex required to have a central haulage level and the shaft. That's something for the future. But you can see all the development, its ramp access, and the development has been done very, very well. On this slide, you can see some of the 2 different colors on the drill holes. This was part of the phase 1 and phase 2 drill program. Essentially, the strategy was to drill up dip and down dip on the veins, just to show that they continue. And we were successful just about in every hole. And this sets up very well for driving the development on ore and mining. There are already stopes that were set up to be dropped that First Majestic just left in place in 2019 when they put it on care and maintenance. So the mine planning is well advanced, and we're ready to restart it, subject to the restart capital. One highlight from this slide is the best hole that we had was 14.6 meters for 1,810 silver equivalent. That was one of the top drill holes of 2023 in the world. Here on the Rosarios slide is the same strategy, just drill below prior existing stopes, and where First Majestic mined, and in between them where we found strong mineralization that previously wasn't mined. And the key takeaway is that it's open at depth, and above and beyond finding more of what they already had, it's open. So as the development it goes down and the veins are mined, we'll continue drilling and push it deeper, just like several other mines in this trend in this camp that are 2 and 3 times deeper than where we are. Same thing at San Marcos, open at depth, and we will continue drilling and expect to find as good or even better than what was previously mined. And just to show that there is significant opportunity at depth, all of these mines that are listed in this trend are 2 and 3 levels deeper than where we have mined. And so there's a, we already have 31 million ounces, all categories and the pillars. And, First Majestic mined 34 million ounces out of here. So we expect to be here for a very long time. One of the key opportunities is to blend in some of this high-grade stockpile. It's about 6 or 7 weeks of feed that was stockpiled right next to the crusher. This will be blended in with the newly mined material once we get started. And then another potential that's not included in any of our scenarios currently is this stockpile, this low-grade stockpile. It's about 60 to 65 silver equivalent. And this was mined out of the open pit and stockpiled, and the higher grade material was sent to the mill. But this material has already been mined. In the future, we'll do some met testing and figure out whether we can exploit this. But if you just look at current silver prices, it's around $50 million of value. So that's a good, back pocket opportunity to be evaluated down the road. It's not currently part of the plan, but it could come into a plan at some point in the future. I'll say a little bit about San Diego. Ultimately, we'll want to get back exploring here. The market really liked the exploration and the drill success that we had here back in 2020, 21, and 22. And just to show that when we took the company over, San Diego on the left side, that 210 million ounces, most of it was contained in the Fernandez zone, which you can see in the pink and yellow. And these red ellipses were targets that the team identified to be followed up. We followed those up between 2020 and 2022, and we were very successful. So on the right of the page, you can see that we confirmed a 500-meter vertical structure about 100 meters away from Fernandez with similar grades. And just shows huge potential, 84 grams over 134 meters, 169 grams over 42 meters. So there's a lot more of this skarn where the Fernandez zone is, and so San Diego can be much bigger. One of the things that we didn't expect, but we were pleasantly surprised on, is the potential for a significant open pit sitting right above the Fernandez zone. In hole 2157, you can see that we cut 72 grams over 273 meters. It's all, almost 3 football fields. And in some other holes from 2006, well before our time, and 2007, that are in proximity to hole 2157, it showed similar grade. So the geos think there's a really good open pit sitting right above here. And so in the future, as things open up in Mexico, San Diego will be worth a lot of money, and will be able to realize that from the market. So what's going on right now? We're engaged in the optimizations with Whittle Consulting. And in the future, we'll do the trade-off studies. So there's potentially some higher grade veins at San Diego that is within trucking distance to La Paria. We'll investigate the low grade oxide stockpile, and subject to financing, we would be in production by the end of the year. Okay, I'll stop there, and if there's any questions, I'll take those now.
Thanks, Greg. Yeah, we've had a couple of questions pop in as you were doing your presentation. The first one was a question regarding the capital cost to recommence. What's your best guess as to the capital cost at this stage?
So the pre-production capex is around 15 million US, and the way we've been working on that is we've been working with various off-takers and lenders. We've received several term sheets, and we're working through due diligence with them. And we would expect that within a couple of months, we'd be able to announce something and then get going on the restart.
So clearly with that type of capital, you basically have all of your equipment and the mill is operational. Can you explain a little bit about that?
Sure. So the operating guys have gotten quotes on and Gantt charts on all the work that needs to be done. They know who they want to contract with, and just waiting on financing so that they can execute. The restart capital includes the rehab of the plant. Number two, it includes down payments on rolling stock, so the mining fleet. Number three, it also includes some development before startup so that we have significant ore on surface before we restart the plant. And then finally, it contains some working capital for us to onboard the necessary crews to operate the mine.
And once you get started, what kind of mining rate would you be looking at?
We're looking to feed the plant in the neighborhood of 1,250 to 1,350 tons per day. That is under capacity. That would leave up to 700 tons per day on average of oxide capacity. But as I showed, there is a stockpile available. We'll do met work on that and see if we can run that through the plant. It's about it would be over 3.5 years of feed. We've also been approached by other mining operations in Durango about toll treating some of their ore. And then obviously we also have the opportunity to bring material from San Diego over to La Paria in the future. So
just remind us, what's the capacity of your current mill now?
The capacity is 2,000 tons per day. Okay. And our base case plan would see us running it at 1,250 to 1,350 per day.
Oh, very good. One of our listeners has asked whether or not there's any seismic activity in the neighborhood. Are you aware of any seismic issues in and around Durango?
No, we haven't heard that. So the answer is no.
Okay. We're also curious about the recoveries, like for the variety of ore types that you've got. What kind of recoveries are you expecting? So
the recoveries are high 70s to low 80s, and it will vary based on the mineralogy. But the mine has a very consistent record. One of the things about a restart is if you have all the prior data, then it's a lot easier to pin exactly where everything is. It's not a bunch of experts just doing spreadsheets. You actually have actual data, so it's even better than having if you were to do a feasibility study. It's even better having the prior operating data. So yeah, high 70s, low 80s.
No, it is indeed a good test. We're also, you've got the project completely permitted for the restart, but you mentioned San Diego as a potential open pit. Do you have any kind of concerns about open pit permitting an open pit in Mexico these days? And what's the situation with the local ejidos at both operations?
So we have full agreements with the ejidos, 10 and 5 year agreement. So we are at La Paria, it's a 10-year agreement. At San Diego, I think it's a 5-year agreement. So we're fine that way. In terms of open pit in Mexico, everybody knew under the previous government that they were against open pits. The current government seems to be open to open pit mining. But we'll see as things move forward. We should note though that the new government has made a lot of positive moves. They've populated the civil service in the mining space, which they weren't doing anything under the prior government. Now things are moving again, and we've heard of a couple groups getting permits to move things forward, and we know in our own case that things are advancing. So we're quite encouraged. Fortunately for the restart, we don't need because it's all on the ground. We don't need any sort of open pit permit. But down the road, we would expect that things will open up in Mexico in time for any future plans with San Diego to come into effect.
Yeah, fair enough. So obviously you have all of the water, the process water that you need. There's no restriction there.
Indeed. In fact, we have more water than we need. Our permit allows for more water than we need for running our operation.
Oh, very good. You mentioned your exploration was really quite successful last year. Do you have plans to resume drilling at either project this year?
So we would the focus has to be to get back into operation and at La Paria. And then once we're in operation, I would expect us to recommence drilling at La Paria. And then future from that would be doing some more work at San Diego. But right now the focus is to get the financing, rehab the plant, get into production, start generating cash flow, and then we can recommence exploration.
No, thanks for that, Greg. Listen, there's no other questions, but I just wanted to take an opportunity to tell our listeners about the model that we have on the La Parella mine. Obviously, I've put together some estimates. What we think right now is that there's visibility on a 7-year mine life at La Parella with considerable opportunity to extend that beyond that. Our model is based on total production of 15 million ounces of silver and 21.5 million ounces of silver equivalent production over the mine life. That averages through the about a 5-year period at over 3 million ounces per year at all-in sustaining costs of around $18.60 per silver ounce. So there's a reasonably good profitability profile here. The NPV discounted by 5% over this mine life is 140 million Canadian. It generates an IRR of nearly 100% and a payback of just 1.1 years. So we have a very compelling model to suggest that La Parella starting out has a really bright future. And as Greg has highlighted, we think that there's considerable exploration upside over the longer term. That doesn't include any kind of credit at this point for the San Diego project, which would be an add-on and a bonus to the project. So we have a very compelling model to generate a NPV that is at 39 cents a share. We discount that down to 27 cents a share. That, as I said at the beginning, would represent about 125% return on equity. While I was doing that, we had another question about from one of our listeners to maybe explain a little bit about the financing that you're looking to? Is it debt, equity, stream? What kind of financing alternatives are you looking at, Greg?
So the focus for the restart capital, the 15 million US, is to do an offtake or debt. So offtake, for those who are not aware, would be essentially a pre-selling of your metal, of your concentrate, and then they discount it when they pay you for it to get their return. And a debt would be just straight debt.
Okay, very good. No, I appreciate that. That was one of our listeners was curious to hear about your financing alternatives. I did notice that you have some warrants that are outstanding. Do you have about an average price for those warrants?
A number of them are at 34 cents, and then the last two financings they were at 16 cents.
Okay, so they're getting close to being in the money, which would help.
Indeed.
Okay. Listen, Greg, thank you very much for your time this afternoon. Thank you to our listeners for paying attention. This is an exciting story. We look forward to hearing more as you move forward, and congratulations and best of luck with the restart at the end of the year.
Okay, fantastic. Thank you very much, everyone. And please feel free to reach out. If you want to discuss further, you can get either, if you don't have my contact details, you can get them through Ron or somebody else at Red Cloud. And again, thank you very much.